Michelle is the managing member of Losi Mitchell and Associates. She earned a bachelor's degree in accounting from Wichita State University. I didn't realize that. Okay. She has over 30 years of experience in public accounting, 5 years spent at Big Four accounting. She's dedicated her entire career to public accounting, focusing on the needs of the nonprofit and affordable housing industries. And I'm sure that that's very complex accounting for those. They're not easy deals. She has extensive knowledge of the low-income housing tax credit program and the regulatory requirements of various federal and state governmental housing agencies. And her volunteer time is with Junior Achievement, where she's on the board, in Butler and Warren County in Cincinnati. So if you'd like to come up and start your presentation. She's also back office spender.
Good morning. I am Michelle Losi. I am a CPA and have been a CPA for 30 years. Started my career at Deloitte. Was there 5 years, took a few years off to have some kids, then a former colleague called and said, I'm going to start this accounting firm that's family friendly. Well, in the 90s, that was pretty revolutionary, a family friendly accounting firm. And, but she says, no, I promise, it's family friendly. So I was, used to those 12-hour days of public accounting and went to work for her and have been there ever since. So I started at the national firm doing some housing in Cincinnati, and from there just kind of continued with the housing and nonprofit areas. What I'm going to talk about today is mostly just some technical things that CPAs are going to do for you when they look at your nonprofit. Our firm does mostly audits of financials. We are going to audit your financial statements if you need that for a bank, if you need it for, a lot of times, a grantor. LISC might want that. If you have government funds over $750,000 a year, you do have to have an audit. We also can do a review or a compilation, which is a little bit less procedures than an audit. And then we do tax work, which are 990s for your organizations. Probably that's where I'm going to focus is the tax work right now, because although not everyone has to have an audit, everyone does have to do a tax return. So there are 3 different tax returns that you have to file, 3 different levels of the tax return you have to file with the federal government. The less being a 990N. Now this was only put into law about 10 years ago, so it used to be if you had under $50,000 in receipts, you didn't have to file anything. And now everyone is required to file a 990N. If you have gross receipts less than $200,000 and total assets of less than $500,000, you can file a 990EZ, which is about maybe 3 or 4 pages if you add a Schedule A. So it's a little bit more complicated. And then a full 990 is for gross receipts over $200,000. Sometimes you may want to do a full 990. Some granting organizations will accept that instead of an audit. So they want something a little more than an EZ form. But if you do a full 990, they'll take that instead of having an audited financial statement. Just a little bit about the due dates. Your 990 is due on the 15th day of the 5th month. So if you're a calendar year end, it's going to be May 15th, which is coming up very soon. You can file for an automatic extension of 6 months. So if you don't have your information ready by now, you should be filing for an automatic extension. It used to be a few years back, you had to file for 2 3-month extensions. Your first extension was automatic, your second one had to be approved by the IRS. They've done away with that, and now it's just one blanket 6-month extension. that is automatically approved. If you do not file on time, there are penalties, and they can be pretty stiff. It's $20 per day for each day the return is late, up to $100 per day, with a maximum of $50,000. You know, I know that we're all nonprofits, there's not a lot of extra money, but you will get a letter from the IRS if your tax return is filed late. I think it spits it out automatically. So they're not gonna just assume you're a nonprofit, you got it in a day late, it's no big deal. They are gonna send you a letter. If you get that letter, don't automatically pay it. It's much easier to fight an assessment than pay an assessment and get it back. So I would suggest whoever did your tax return, your CPA can write you a letter. The IRS is really pretty good about if you have reasonable cause that your return was late. A lot of nonprofits change management a lot, or there's something going on that's causing nobody really meant to file it late. I mean, there's no tax due. There was something extenuating that happened and it got filed late. I have been in practice for 30 years and I have written a lot of letters to the IRS and have never had a client have to pay a penalty. They're just really good. Now, sometimes you have to file 2 letters. You know, you might file the one letter, they come back and say, it's not good enough. So then you have to file another letter. And that might work, but really don't panic if you get those letters. They're kind of scary. They say they're gonna come foreclose all your property and bar the doors. And you know, they could do that, but not necessarily, they're not gonna do that. So just contact, and even if your accountant, you didn't have an accountant do your return, you did it yourself, you can still contact a CPA and they'll write a letter for you. Now, if you don't file for 3 years, your tax exempt status goes away. Yeah, and that is a problem because to get it back, it's not impossible, but it's a lengthy process. I've just been working on one that I started maybe 6 or 7 months ago. We've done the paperwork, it's come back from the IRS, or we've answered questions, it's gone back and forth. So it's a lengthy process and it doesn't necessarily mean they're gonna give it back to you. There's a lot of questions now or different reasons for tax exempt status now that there weren't maybe 30 years ago if you had it. And if you had just kept up your filing, then you might have just been able to hang on to that and not had to go through the extra process of getting it reinstated. Just to go over a little bit about what you need for the 3 levels of 990s. This is the federal government filing. There is also a state government filing. When we do our 990s for our clients, we go ahead and do that state filing because a lot of the information that you need to do the filing is from your tax return. It's not complicated. You can do that yourself, but we just do it as a courtesy to our clients. The 990N is, they call it the postcard, even though it's all electronic now. It used to be a postcard that they would send you and you would check a box. These are only the 8 things that are needed. So it's very simple to do a 990N. It's just basically, there's really no financial information at all. You just have to confirm that your gross receipts are less than $50,000. Give your name, your tax ID number. Very simple. You can do this yourself. We have a few that we do because the clients have kind of gone from a 990 or 990 EZ down to the postcard. Maybe the organization is kind of trickling out, and so we just do it as a courtesy, or we do some pro bono work that we will do this for them. But most of the time, organizations can do this on their own. It's pretty simple. The 990, yeah, this is the 990 Easy. So there's a few more things on the 990 Easy. It's not extremely complicated. They do want like your gross receipts. They want your list of officers, a bunch of questions that kind of tells the IRS where the organization is headed. You do have to provide a Schedule A, which is a few pages of 5 years of financial information that they want to know where your money's coming from, pretty much. They want to know if it's coming from the public, if it's coming from foundations, if it's coming from the government, if it's coming from sales. So there are some things that they want. The officers, they do want you to detail all the income that officers, key employees, and directors receive from your organization. So this is a way that if you need to compare your organization to another organization, if you go on a website called GuideStar, you can actually get the 990s for all of the nonprofit organizations that are available. Download that, and you can look at the salaries and compensation. I know that's one thing that boards are required to do when they're setting salaries, is to look at just kind of compare the salaries of your executive directors. I think it's another way just to keep the salaries in check, so to say, so that because you have to publish that, you have to publish all your benefits, anything you receive from sister organizations on that website. Sometimes it's kind of confusing on the definitions, and that's why in number 4 I have listed the IRS definitions for an officer, which is the president, which is more like the board. Officers are from the board. Directors are your executive director, your VP of finance, and your key employees are going to be anybody that makes over $150,000. I know, yeah. I've rarely actually had anybody that had key employees, so yeah, I usually just pass over that one. I'm like, it's not gonna happen. There are some things too that they want to know. They want to know about political activities. You're allowed to do things like influence legislation as long as it's nonpartisan. You can, you just have to keep track. If you spend money on an organization, you need to detail that on your 990 Easy. And then the last bit of information is, now you probably can't see this, can you? All the information that's required on a 990. So what happens on the 990 is there are a series of questions on the first few pages. And if you answer yes to those questions, then it's going to make you go back to these schedules, which is Schedule A all the way through Schedule R, and fill out detailed information about what you have said you have. Like if you have professional fundraising or fundraising events over $15,000, then you have to fill out a schedule that details all those. If you have political activities or lobbying, you have to fill something out. If you have activities outside of the United States, that's a big question that they want to know these days, is about any activities, any bank accounts that are outside of the United States.
So your Swiss bank accounts.
Yeah, you can't put those on there.
Your big money account.
Yeah. They also want you to detail all your income sources and all your expense sources. And your expenses, they want you to detail that out in program, fundraising, and general administration. And this is where you get a lot of when you hear on the news, this organization only has 50% of their income going to programs. Well, this is usually where the news media or somebody has gotten that, is from your 990. So it's not something you just want to just throw in to your 990. Oh, I think that might be 10%, that might be 20%, because people are looking at these. They're going to look at these and see exactly where your money is being spent. There is also a schedule for non-cash contributions. Schedule R is about related organizations. I know that happens with a lot of the CDCs. You have an organization that has the same sponsor. You have to put all your transactions with that sponsor. A 990 is pretty complicated. I would say in the range of a 990 EZ is probably going to run you between $500 and $1,000, and a 990 is almost always going to be over $1,000 to have it prepared. It's just an expensive tax return because there's a lot of information on that. So that is a little bit about the 990. And then I was going to skip to internal controls. So if you have any questions on the tax return.
What about anonymous donors? You know, some nonprofits get those, people that donate things to them but don't want to be recognized. How do you account for those? That type of cash?
You are allowed, the only time you have to schedule out a donor is on Schedule B. And if that person has more than $5,000 of the contribution, you're required to put that person's name on the form. But a Schedule B is not public knowledge. So if your 990 is published, it won't have the Schedule B on it. So they'll always take that off. Good question.
What was the cutoff for the EZ in terms of gross receipts?
I think it's 200,000.
And is there any functional difference where, because I'm imagining for my organization that we might fall under EZ territory, is there any reason why you'd want to stay with 990s versus doing EZ, or?
Not especially. It does say usually, if you usually file. So if you have 1 year that you just happen to be 5,000 under, and then the next year you're over again. But I've never seen the IRS come back and say, you should have really filed this, you know. So, I mean, if it's going to be easier to file an EZ, I would just do that.
And Michelle, did you get a chance to introduce your staff?
I did not. I have my business partner, Emily Mitchell, is here. And then Connie Krebs is our audit associate. And they came to give me moral support.
Maybe make some mingle and answer questions when we're finished.
Yes, and you know, I know Emily does a lot of work with CDCs in the area. She's also on the board of Invest in Neighborhoods. So we do audits of a lot of the CDCs, and we also do tax work and do some consulting projects sometimes. One thing we don't do as the back office project is we don't do accounting work, like your regular accounting work. But we do have people that we recommend to do that. We have some really good people. We can't do that and do audit work also, so you know, we will recommend somebody else to do that, and then we can do your audit work for you.
And I'll mention real quickly that one of the training sessions we're thinking of maybe for the next round is how to prepare for an audit. So just as you have some questions maybe that you think you want some more information on, let us know and we'll work that in there. Why don't we switch in about 2 minutes over to Michael?
Oh, after, okay, yeah, I just have a few more things. We're going to talk a little bit more now about internal controls. So this is more about, not about your tax compliance, it's more the other side with your financial person and how you control whether mistakes are being made, mistakes are being caught, if fraud is occurring. This is something that we look into more detailed when you have an audit, but it's important in any organizations, whether you have an audit or not. There are 3 factors that must be present for someone to commit fraud, and this is called a fraud triangle. There's either motivation or financial pressure, which is somebody's in debt, their family member has an addiction, they have health issues. You know, there's a reason why they need the money. There's really nothing we can do about this one, but we can just be aware of it. The next one is rationalization. I deserve it, I'm underpaid. Unfortunately, in the low-income housing and nonprofit area, I see this a lot because we do give our all to this business and don't get highly compensated for it. And so, I've heard the rationalization that, well, I've spent my life building housing for homeowners, or for low-income homeowners, and I deserve maybe not to steal money, but to maybe skirt the issues a little bit, or just do something a little under the radar because I am such a good person. So I have seen that sometimes. And then the last thing is the opportunity or the lack of controls. And that's the thing that as organizations we do have power over. And so I'm going to go through a few of these. Internal controls is to provide reasonable assurance that transactions are properly authorized, assets are safeguarded against unauthorized or improper use, and that transactions are properly recorded to permit preparation of financial statements. That's a very long sentence. But it's just saying that internal controls help us identify and prevent these things from happening. So I think a lot of people hear internal controls and they think fraud. It's not necessarily fraud. It's about catching those things that maybe are just mistakes. Something that somebody should have caught, or just something that happened in the normal course of business. Or maybe you're new to this job and you didn't know that it was supposed to be done this way. So that's what internal controls are. They're often ignored in nonprofits because people tend to trust each other and there's lack of experience or financial constraints. So you may have, maybe a couple of people and you trust them with your life. And I was on the first kind of organization that I was like a treasurer on the board for was a local PTA. And they handed me all the books and they said, oh, well, you're a CPA, so just take it and, we don't want to see it again. And we trust you because you know what you're doing. And I wanted to say to them, well, that's probably the worst person because I do know what I'm doing. so I know exactly how to hide things, or, the people that really aren't experienced, they're a little easier to catch. But the people that really know what they're doing, when I have a client that is an accountant or an old controller, or I kind of look a little more closely because they know what they're doing. So just a few more things about internal controls. Some of these don't have to be actual procedures, they're just more of an environment. Tone at the top. I always say if the executive director does not turn in the receipts with their expense report, then no one else is going to either. It's like you have to set that tone at the top for it to go to everyone. If you let the top person get away with it, everyone else is just going to say, well, they don't do it, so I don't have to either. Having a written code of conduct is always helpful. Having independent auditors or reviews, that's just my plug there. Having a finance committee with a CPA on it is really helpful. And then segregation of duties. And this one is one that I think that people don't realize, that you can have a segregation of duties no matter how big your organization. And I just have a few examples of some segregation of duties. Now this is a 3-person office. So we have a bookkeeper, an office manager, and an executive director. And these are just some breaking out. You don't want the same person to authorize or to record or to approve, or not approve, but review a transaction. And so when you have 3 people, it's very easy to split that out. You know, maybe you have one person open the receipts coming in, another person that records those, and then maybe somebody else reviews those. But when you get to these small organizations, like either a 2-person, which is the top where you have a bookkeeper or executive director, or even just a 1-person where all you have is an executive director and a board treasurer, you can still have some segregation of duties. I really find that for small or volunteer organizations, it is imperative that your board be on board to review that financial information. If they're going, and then also if they're reviewing that financial information, as the person that's, like, I'm the person that's recording it, I'm the executive director, and I have that board treasurer review it, I would want them to sign something, initial something. If they're reviewing my bank rec, have them initial that, so that you have that safeguard for yourself, that, well, somebody else reviewed it. I see that doesn't happen a lot. The actually reviewing process doesn't get documented. I do see a lot of boards pass out the financials and everybody looks at it for 3 minutes and then they say, proved, and nobody really understands what's on there. Nobody's really looking. A treasurer should look at the actual check register to see what checks were written. You know, maybe not, that's not for the whole board, but that is just for maybe 1 person at the board to kind of go over that, especially when you have a small organization that just has 1 person in control. And that's all I have. So, did you have some questions? Like,
No,
you raised your hand over there. Okay.
If you have a situation where your bookkeeping's done by a board member, would you assume having a second board member overseeing, like your treasurer does all your bookkeeping and all your, you would think 2 board members, or?
I would probably have the board president look at that and sign it off. You don't ever want to just have, and that's even for your own safety. You don't want that, you don't want to be the only person, because on a nonprofit, if there's fraud or if there's something going on, it comes back to the board, and the boards are the ones that have to answer for that. So,
I think those are really good tips. I found a few just between our own organization, what we need to do maybe that we could be doing better. So, and I want to mention that we'll put the slides on our website or somehow have them available so that you can go back and access those later.
and I do have our brochures in the middle of your table if you want our information, just so you can contact us. And then we have some free letter openers also that I put on.